Avalara time.
All
Okay.
right, let's go. Michelle, are you ready?
I am definitely ready.
All right, I'm
Excited to be
going
here.
to stop sharing my screen and video and let you take it away.
All right, perfect. You can see my screen, correct?
Looks great.
All right, wonderful. Well, thank you for allowing me to join today. I'm super excited to be here. I too will be in San Antonio and presenting as well, so I'll see you ladies there. I wanted to just take a few minutes to introduce myself, if I could. The screen should have changed. I think we're all good. My contact information is there. I'm not going to read all of this to you. A couple of key points. I am a sales executive at Avalara. I work on our Microsoft team. So I'm specifically working with businesses using GP and other Microsoft products and really helping them to evaluate how our solutions might work in conjunction with the investments they've already made in technology. So I joined Avalara just a few years ago. I spent 8 years in uh, payroll and HR compliance. And then before that, I actually was a teacher. Everybody kind of wonders how I made a career switch. I taught high school English. And but really teaching, educating, helping people to understand what their options are, how things work together. That's really kind of what my goal is. So it translates well to what I do currently in helping businesses. So I wanted to talk a little bit today about Avalara and how it really fully integrates with GP and the benefits that it could bring to any organization. First, I'll just give you some high level about Avalara itself. If you haven't seen us in orange on the show floor, or if you've always wondered what that commercial is with the hot tub, really our goal is to make sales tax less taxing. So sales tax itself is extremely complicated, especially in the United States. And I'm going to talk a little bit about that today, just really what makes it so complicated and why a solution like ours is really necessary for most businesses. But just to really give you a little high level about Avalara, we just celebrated our 20th anniversary. And one interesting thing to note is that we have over 1,200, it's actually over 1,400 different partner integrations. So one of our first integrations that we built was actually our connection with GP. So when we were looking at ERP systems, GP was the one that we looked at, built and tested that integration, and then really grew from there. And now those integrations number, as I mentioned, well over 1,000, which is far more than any of our competitors combined. So our goal really in making those connections is to meet our clients wherever they are and in the technology, again, that they've made an investment in, whether it's their ERP, their e-commerce site, CRM, whatever that may be. So we are a global organization. We are headquartered in the US, but we do have offices around the world. A huge presence in the UK, Brazil, India. So really trying to not only support our clients with North American sales tax issues, but with those global issues. We are much more of a global community, and a lot of businesses, again, in order to compete, to grow, they do, sell cross-border, they do sell online. And so really we're trying again to make that process easier for them. So a couple other things to note, there are a few things that are up there, 39.6 billion AvaTax API calls. When we think about sales tax, again, we're trying to automate that, and every single transaction has the need really to make some sort of determination about whether or not tax needs to be applied, and if so, how much that tax is. So when you think about it, things like Black Friday, that's like our Super Bowl. So we're doing billions of transactions, evaluating those, making a determination and a calculation on those. But that's not the only thing that we do, and I'll talk a little bit about that today. We've also, in 2022 alone, prepared over 5 million returns. And again, we've got clients all over the world. So 30,000 customers in over 95 countries. And I actually think that's a slightly old statistic. So even more than that now. I want to take a second and just stop. Amy, if you can help me out with the poll. How familiar are you with automated tax compliance solutions? So very familiar, somewhat familiar, not familiar at all. take a minute for everybody to go ahead and answer that.
So far, it's somewhat familiar.
All right, wonderful. So my goal today is really to talk a little bit about the sales tax itself, really what makes it so challenging. Because again, a lot of people are somewhat familiar with sales tax automation because they've either used it, maybe they've started to explore it, but a lot of people aren't. And it's because maybe they don't really know all the ins and outs of sales tax compliance and aren't sure that they really need a solution. So that's really where I want to start. And a lot of people, when they are thinking about sales and use tax and sales and use tax automation, they're really thinking about tax calculation, right? What's the rate? But what most people aren't thinking about is it's really just the tip of the iceberg. There's so much more that goes into sales tax compliance than just figuring out that rate. So I really want to take a minute to kind of dig into that piece a little bit more. So it can be really complex, as I mentioned earlier, and super time consuming. So if you just take a look at this, you know, some of the stats that I have up on the screen, there's over 165 million mailing addresses in the United States. So if you're just thinking about the United States, we're not thinking about all the other countries in the world, 165 million addresses, 13,000 sales and use tax, over actually 13,000 sales and use tax jurisdictions in the US, right? There are thousands of rates that you have to, know. Millions of different types of exemptions that you might need to be aware of. It's not just one type of exemption. There are lots of different types of exemptions, and they change state to state. So really, there's a lot that you kind of need to be aware of in order to manage sales tax. So I always put this graphic up when I'm having a conversation with a potential client as a starting point. And this, to me, makes it a little bit more simple when you're thinking about what does it really take to manage sales tax compliance. And the first part of that is understanding where your business needs to collect and remit sales tax, because you don't necessarily need to collect and remit everywhere. So you have to first figure that out. And then once you do, you have to make sure that you're properly registered in order to be able to remit, because you never want to collect sales tax if you're not registered, because you have no way to remit that. And that's tax fraud. So certainly want to avoid tax fraud at all costs. So know where you need to be registered, get registered appropriately there. And then comes the calculation piece, right? So calculating what that sales tax is. And again, that can be tricky because the rules change from jurisdiction to jurisdiction. A lot of businesses also have to track those exempt sales, because when it comes to exempt sales, often it's not about what the rate is, but it's about proving why you didn't charge tax. And then you have to get it back to the government, right? So those 5 things, just in the simplest form, are the main steps in order to truly manage sales tax compliance. So I'm going to take another minute. I got another poll for you. What is the biggest challenge your business faces in tax compliance? Is it staying updated with changing tax laws, managing tax compliance manually, ensuring those tax calculations are accurate? Is it figuring out Nexus and where you should be registered? Or maybe it's something else.
It looks like staying updated with the changing tax laws is number 1.
All right. So, I'm not surprised that that was the number 1 thing, because the business landscape really has changed drastically. Online sales, remote employees, storing inventory in different places, drop shipping, all of those things can really change your sales tax obligations. And the rules around that change from state to state. So just think about the pandemic alone. If we think about the last 5 years, the pandemic alone changed so much for people. You had businesses that never before had remote employees. All of a sudden, all of their employees are remote and moving during the pandemic, right? You had the need for a lot of businesses who maybe didn't do online sales to really do online sales, to do delivery, to do that drop shipping. So a lot has changed for many businesses. And again, as the world keeps changing, the economy, the way we do business, that can really change how it impacts that tax landscape, that your obligations, your exposure. In the US specifically, and then again globally as well, each state, each country, they all have their own rules. So it's funny, but when you talk to somebody who is, maybe outside of the United States, when they look at the United States specifically, they often think, oh my gosh, it's so confusing because it's like we have, 50 many countries, really, when you think about all the locals and the states and how all of those rules and regulations can change from state to state. So it is changing fast and is really hard to stay on top of. We actually did a survey in 2023 that's similar to the one that I just gave you. And what you can see from this survey is the top things were keeping up with the changing tax laws. So your responses are right in line with what we heard in spring of 2023. But right behind that was understanding Nexus. So in order to keep up with the changing tax laws, understanding your Nexus was right there behind it. So I want to dig into Nexus for a little bit. So what is Nexus? I have the definition up on the screen, but essentially it's when you've made that connection, right? You've triggered something with a taxing jurisdiction, like a state, and you have an obligation to register, collect, and remit tax at its simplest. So what is challenging about Nexus, right? Nexus, honestly, each state has different rules for establishing what that Nexus is, what those triggers are that will require that sales tax calculation and filing. And they go far beyond physical presence. So when you think about it, in terms of Nexus, we always thought about the physical, people, places, goods, right? Things, people, place, things. You got a location there, you've got boots on the ground, employees, maybe you've got inventory. That does all trigger Nexus. It's what we call physical Nexus. But there are a lot of other physical things that might trigger Nexus as well. So things like we were just talking about going to Summit, right? So when you send employees to trade shows to represent your organization in some way, that can trigger Nexus because it is a physical presence in a state. It depends on the state. It depends on how long the employee is there, but some states it's as little as 3 days, right? So if you're attending Summit and you're there for the week, you could potentially trigger Nexus if that state has a rule around something like trade shows. Marketing can potentially trigger Nexus. But you'll also notice things like economic Nexus at the bottom, right? So I've listed economic Nexus. It's not just the physical activities that can trigger Nexus, but about 5 years ago, a little over 5 years ago, we had a landmark ruling. It was the state of South Dakota versus the company Wayfair. So if you've heard of that Wayfair decision. And for a lot of businesses, this changed everything for them. So it was 2018, actually, June 20th. So it's 6 years now. Basically, prior to this decision, physical Nexus is what would trigger that obligation. If you had no physical presence in the state, but you were selling or shipping to the state, that didn't matter. But with this decision, it eliminated the physical presence standard. And anyone who is selling remote, again, you're selling to that state, delivering to that state, drop shipping to that state, that could establish Nexus for you. So the Nexus laws changed. Once South Dakota won that case, all of the other states were waiting in the wings to enact laws that would put an economic Nexus threshold into effect. And so now all 45 states, all 45 states that have a state sales tax regime, plus Washington, D.C., Puerto Rico, and even Alaska. Alaska does not have a state sales tax, but they do have local sales tax thresholds. All of them have economic Nexus thresholds. So what do I mean by that? I'll give you a little picture of it. The economic thresholds by state You know, most of them are going to be $100,000. Some do have a transaction volume or level in addition to or in lieu of the dollar amount. So most are going to be 100,000. You've got a handful that are 500,000, like California, Texas, New York. But all of them do have that sales tax economic nexus threshold. So that put a lot of businesses in a tough spot because they don't have any kind of physical presence in the state, but they're selling across the country, whether that's because they're in, you know, they're a manufacturer who is selling to their clients across the country, and maybe it's even exempt sales, or they've got an e-commerce business that, they're shipping all across the US. It really put a lot of businesses in a pickle, for lack of a better words, right? Where they all of a sudden now, instead of having just 1 or 2 states they had to contend with, now they have 20 or 30 states they have to contend with, where they're having to do that tax calculation. They're having to manage those rates, manage those exemption certificates, those returns. So I want to talk a little bit about just how challenging that can be across all of those different states. Because again, each state can make its own rule. And I love to share this slide because there are some really quirky sales tax rules out there that vary from state to state. So often people will say, well, I think this is taxable, or it's not taxable at all. Or can you tell me, is this taxable? And the answer is almost always, well, it depends, because it depends where the product is being shipped or the service is taking place, and whatever the rule of that state might be. So I pop a couple of these funny ones up there, but like donuts in Texas, if it's less than 5, it's taxable, but if it's more than 6 or more, it's exempt. Bagels in New York always gets me. If it's sliced, it's taxable, but if it's whole, it's exempt. Why? Right? But the answer to that one is because it's considered a prepared food if it's sliced, and not prepared food if it is not sliced, which is just absurd. The candy bars in Indiana is always an interesting one. Snickers are taxable, but Kit Kat and Twix are not taxable. And I don't know if anybody wants to jump into the chat and try to see if they can figure out why Kit Kat and Twix would be exempt. The answer to that is actually the flour in them. So that crispy part makes it a food, not a candy. And candy is taxable, where traditionally food is exempt, right? So very interesting. How do you keep up with all of that, right? Cotton balls are exempt, for example, usually because they are considered a medical device, whereas cotton rounds are often taxed because they are considered cosmetic. That's another one that's not on there, but an interesting one as well. But product definitions are going to change based on the jurisdiction. A lot of products can be super complex when it comes to tax rates, when it comes to tax exemptions. And again, it's just going to vary from state to state, and it's all dependent on how it's going to be used. So again, super challenging. When it comes to that sales tax piece, again, I mentioned this earlier, there are over 13,000 US jurisdictions. So when you're thinking about that, a lot of people want to think about zip codes, and they're going to do the tax rate lookup based on the zip code. But it's actually not a good way to do it, because again, there are over 13,000 jurisdictions. You can try to look up just a tax rate, but if you'll notice in this graphic here, a lot of times boundaries can overlap. And so you might have multiple tax rates within one zip code. The full mailing address is what needs to be used in order to get that correct jurisdiction and the correct tax rate. So this is just a quick peek at actually Colorado. Colorado is notorious for this. But again, you can have a state sales tax, you can have a county tax, a city tax, special taxes, and all of that is really targeted to the actual address itself. So within one zip code, those rates can vary so much. And being off by even just a little bit, depending on the number of sales you have, could really create a problem for an organization. And I want to show this next piece because a lot of companies that I talk to, they've heard of Wayfair, they've heard of the economic nexus piece, but they think it doesn't really apply to them because most of their sales are exempt, or maybe even all of their sales are exempt. But this graphic is pretty interesting because it does show you that most of the states that do have those economic nexus thresholds do actually include exempt sales in those thresholds. So theoretically, yes, you could have 100% exempt sales in a state, owe no taxes, but that does not, get you off the hook for registering and filing. And the reason why is because those states really do want to track the activity. You have a significant amount of revenue in their state. They want to track that activity. And now it becomes not about proving or getting the sales tax, but proving why you didn't charge sales tax. It's those exemption certificates they want to keep an eye on. And to be quite frank, a lot of businesses that are selling exempt can change that strategy very quickly and start selling B2C, start selling online, and those states want to be ready and prepared to start collecting those taxes. So even the ones that don't include all exempt sales, sometimes will include some exempt sales, but not all. So the rules, again, on what is included in those thresholds can change from state to state. So that brings me to the exemption piece. Again, another layer of challenge and difficulty for clients, for businesses. Exemption certificates, if you have those exempt sales, again, it becomes now about proving why you did not charge tax. So, it's really easy to think, oh, well, this client is exempt. Of course, if I get audited, no big deal. It is about getting those documents and having them on hand. And truly, that is low-hanging fruit for auditors. That is what they will go after because they know it is challenging to collect them. Employees find it difficult to collect them. They don't want to slow down the sales process. It's important, but maybe it's not urgent in their eyes, right? So not a priority. Businesses, that process might not be there to ensure that they are collecting it on time and that they are collecting the right one. And collecting the right one is important because there's not just one exemption certificate that applies to all states for all types of exemptions. There are lots of different types of exemptions. Those change from state to state. And you guessed it, just like all the rules, the forms are different from state to state as well. So employees aren't necessarily trained on all of the different types of certificates for all the different types of states. So, getting it is difficult, and then making sure that it's valid is extra difficult at times. And if you get an invalid certificate, sometimes that can be as bad as not getting one at all, depending on what it is. So there's not really often a process in place for kind of detecting that, making sure that those certificates are not overlooked. And it is a time-consuming process, right? So you do have to retrieve them. You are supposed to have it at the time of sale. Storage methods are, vary from company to company. A lot of people do a hard copy, a folder, maybe a folder on their computer. So not really a lot of backup there for those documents. And again, auditors can come in and they can go back as far as they want in an audit and really ask you for that documentation, which can be super challenging. If you are missing documents, sometimes auditors will give you a chance to go back and get the right one. If documents are expired, which yes, they do expire. So again, extra challenging. Not all of them are, lifetime documents. So in the case of an audit, again, low-hanging fruit for those auditors, sometimes, but not always, they will give you a chance to clean up some of the documents, but usually it's a short time frame. So I'm talking like couple of weeks, maybe a month. And that can be difficult. Imagine going back to all of your customers and asking them for documentation from a sale from 5 years ago, or asking them for an affidavit to, say that they self-assessed because you didn't assess them. It's not a great customer experience. And auditors will actually take that error rate and apply it to the whole audit period. So missing one or two or a handful, 20% of those documents can then be applied to a much larger time period. And then you're paying tax on things that you maybe shouldn't have been paying tax on because of poor documentation. Beyond the sales tax determination and calculation, beyond the exemption certificates, you know, again, if a business is in multiple states, they're having to do all that filing. So they're having to compile all of that information, manage a filing calendar, get all of that information aggregated into you know, the sales and use tax forms, right? So they might be pulling it from multiple business systems, trying to compile that, total that up, and get that on to those forms. It is very time consuming. The error rate is super high. They have to respond to tax notices. They could be doing other things, quite frankly, instead of these time consuming tasks that aren't adding to the business in any way. They really are just keeping the business out of trouble. So not growing the business, just tactical things that are really trying to keep the business out of trouble. And that audit piece is really what it comes down to. So when we think about what Avalara does and all of the challenges of the sales tax process, it all comes down to the audit. In the case of an audit, you know, do you have the flexible tools to be able to, you know, report out on what they're asking you for? Are you able to provide those exemption certificates and that documentation easily without taking months and months away from the things that are, you know, profitable for your business? So, you know, really that compliance piece comes down to making sure that a business is ready for an audit and that audit is as painless as possible, both in the time that they spend and then also in, you know, making sure that, you know, those calculations and those returns were correct so that they're not having to, you know, a big bill where they just didn't have a budget for that, you know, something that kind of just sneaks up and all of a sudden, you know, pulls from their bottom line because they hadn't allocated for that. So there are kind of these 5 W's to sales tax automation. I'm going to go through this really quickly. But essentially, sales tax automation, what is it? It's really automating the end-to-end sales tax processes so that you as a business have greater efficiency, greater accuracy. And really, when it comes to Avalara, it is cloud-based software, right? So that cloud-based software is going to be able to do all of the things that I just mentioned. So not only helping to determine like where you need to register, getting you registered, but doing that tax calculation, managing those documents, filing those returns for you. So having that automated process connected again to your systems like GP, that's really what that sales tax automation is going to be so that you can sleep easier at night. So who needs sales tax automation? Again, all businesses can really benefit from it. So, you know, a lot of businesses are in the mindset that I'm selling exempt. I don't need that. Not true. Almost all businesses can really benefit from automation because not only is it going to save time, it's going to reallocate those resources to something else. It's also going to give peace of mind as well. Keep you out of trouble down the road. So again, not owing is not like a get out of filing free card. There is still that component where you do still have an obligation to register, to file, and to maintain those documents. But the reality is that every business really needs to evaluate the return on investment for themselves. There's going to be a higher return on investment, certainly for businesses that have multiple locations or nexus in multiple states than there is for a single location in a single state, right? That tax burden, the challenge is going to be much greater. The more states, the more countries that a business is, you know, actually doing business in or has an obligation in. Why automate sales tax? For all the reasons that I just mentioned. Super time consuming and can actually be quite costly, and not only the time that's spent to stay up to speed on all of those things, do all of the work involved, and then also the cost of, you know, a negative audit. So really the time, the money that's involved in that. I mean, there are a lot of studies out there. We recently did a study with Forrester on return on investment for sales tax automation. Happy to share that if anybody, you know, is interested in seeing something like that. There are a couple stats on here, but again, that increased confidence in what you're doing, resting easier at night, you know, making sure that you are being compliant. really minimizing the resources that are spent on that so that they can be spent on other things. And that integration with the ERP system so that everything is really running smoothly. When should you pursue automation? This is really important, but the main piece is the best time to do it is before you have any issues, before you get into a negative audit. So I have heard people say, well, I haven't been audited. And then I want to say, yet. So the rules are changing. There's a lot, far more eyes on businesses. The need to be transparent is there, and it's not a question of if but when, to be quite honest. But there are some really good times to think about it. If you are doing any kind of merger or acquisition, if you obviously are looking to sell the business in any way, that's definitely a time to consider that tax automation, make sure you're up to speed from a compliance standpoint. If you're looking to grow, you're anticipating some growth, maybe, opening up a new sales channel, those types of things. You want to make sure that you have the right things in place so that it's not going to hinder that growth, that you have the ability to scale. Obviously, if you've had a tax audit that didn't go so well, then you already probably are thinking about sales tax automation. And then another key piece is like any kind of major changes, especially around technology, when you're implementing new software, making changes to your tech stack. That's definitely a good time to look at sales tax automation as well, because you're already in that mode of, really trying to update that technology. So most of this I've already talked about, but again, sales tax is super complex. It's not something that people want to worry about. It is definitely changing rapidly, and audits are certainly on the rise. More and more states, most states get a so that's when you do see, more audits kind of popping up. And businesses really want to maintain that compliance, right? Really want to stay in tune with, what is being asked of them from the government. They definitely don't want to get into a situation where they owe a lot of back taxes, or their name is kind of, out there in the media of, not paying their taxes, making these big mistakes. So there are good solutions when it comes to sales tax automation. There are great solutions when it comes to sales tax automation. In the essence of time, I really want to hit on the great solutions. And obviously the great solution, Avalara, is one of them, right? So really prioritizing innovation and product delivery. We have a huge team of developers on our side, as well as tax researchers that are trying day in and day out to stay ahead of the game. So not just in tune with what's happening, but really ahead of the game as far as innovation is concerned. So we are looking not only across the US at, what's going on in the sales tax world, but also what's happening in the business world in general, in, again, both the US and globally. Really a solution that's going to allow your business to grow. And that may mean that in the simplest forms, a solution that can not only meet your challenges today, but has the capabilities of meeting the challenges that you may face down the road as your business grows and changes. So I always like clients to think about that. They may have some immediate needs that we can certainly take care of, but they may also want to consider, who their partner is going to be for the long haul. Nobody likes to make major changes if they don't have to. And you really want to look for a partner that has the capabilities to grow with you. And with that integration with, not only your ERP, but the ERPs that you might eventually move to, as well as any other kind of technology that you might need to integrate with on in the future. So whether it's point of sale, whether it's working with a marketplace or an e-commerce system, really looking again to make sure that that partner can really fully integrate now and down the road. So where to start? There are a couple things to think about. So physical presence, economic presence, affiliate nexus, click-through nexus, that's really all about determining your nexus, where you need to be registered. If you'll notice, there is a link at the bottom. We are actually offering a free risk assessment. So if you're not sure, or you haven't done any kind of nexus study in the last, year or two, or any time at all, then I would really encourage you to take advantage of this sales tax risk assessment. It's a questionnaire that's online, that can be completed. It is 100% risk-free. Typically, we charge $4,500 for that, and we're offering it right now at no cost. So I would highly encourage, it's a good pulse point. It's kind of like going to the doctor and getting your blood work, right? Making sure that there's nothing that you're missing there. Because again, you don't want surprises down the road. So that's always where you want to start. Make sure that you're registered where you should be registered and that you're not missing anything, because a lot of the rules have changed, especially in the last 5 years. So I want to talk a little bit about the technology itself. So when you think about Avalara, you've got kind of two components. So one is going to be helping you when it comes to things like tax research and taxability, determining your nexus. And then the other component is going to be the technology, right? The actual automation itself. So one of the main things that I mentioned before that makes Avalara different is those pre-built integrations. So again, you want to choose a solution that not only integrates with GP, or whatever your ERP platform is, but any other tech that you have in place, any other platform that you have in place where you might need a sales tax calculation. And you want to choose a partner that, again, as any of those things change, they will easily be able to swap those things out for you and make those connections. So that's where Avalara is hugely different than our competitors. We have more connections than our competitors combined. But specifically when it comes to Microsoft Dynamics, again, we started with GP. We've continued to build on that for, seamless integration, really driving the efficiency piece and the compliance, reducing risk to the organization, again, making that scalable. So it's actually over 2,000 Dynamics customers that we have. It says 1,700 there, but it's actually over 2,000. So just keep that in mind. That is more than any of our competitors by far. So that experience is there. So I kind of want to walk you through the solution set that Avalara offers. And just really paint the picture on all of the little nuances of the ways that Avalara can help. So our solution set really starts with 3 simple circles. In the middle is the most important one. That's you. That's your business. And then, of course, you're flanked by vendors on one side and customers on the other side, because essentially every business exists to do purchases and sales. But before you can start transacting, you need to become compliant, as I said. So how does that work? So first things first, to get started transacting, you need to be properly registered and licensed. And like I said, we can help with that. But let's say that perhaps you jumped the gun and you didn't do that. Or maybe you registered in one state and that's it. And you didn't realize you had to register in more. All's not lost. It's okay. We actually have services at Avalara that can help you, as I mentioned, assess that compliance risk. So those risk assessments, a nexus study that can help you to determine where you should be registered. If you breached that nexus a while ago, we also have services that can help you negotiate with jurisdictions under voluntary disclosure agreements, so that you can get up to speed, so that you're properly licensed and back on the straight and narrow. And then to the right of that, and this may be small on your screen, but it's kind of an interesting one, you'll notice, because when you're transacting, your business is either operating out of a facility that you own or rent. So for those of you who own property, this is what we like to think of as real property. And if you are a homeowner, you know that real property you have to pay taxes on, right? So we have a solution that supports the collection of those bills, the appeals of those bills if we think they're too high, and then ultimately the payment of them for clients who own their property. And then for clients who don't own their property where they transact, there's actually 37 states who still impose taxes on things inside that building. So in order for you to operate compliantly, you may have to pay taxes on things like desks, chairs, computers. Our software can help with that as well. So when you think about Avalara, obviously, again, before we get into even the sales tax calculation piece, you got to figure out where you need to be registered. You got to get registered there for sales and use tax. And then you also may have to be thinking about things like property tax as well. Those are things that we can help with too. So you can actually see this starting to map out to our solution set. The focus here is to get you up and running before you start transacting. So let's get to the transacting part. The first thing that our clients are going to do in this context that I'm showing you is selling. In real life, they're probably going to buy things before they sell it, but I'm going to start with the sales side. That's, usually what is maybe more fun. So in the upper left-hand corner, you're probably familiar again, if you know of Avalara, calculating the sales tax, right? That's what we're most well known for. That's Avatax. To the right of that, when our client makes a sale, they might be collecting and validating that exemption certificate that I mentioned earlier. That is our ECM offering. So you might have heard of it before as cert capture or ECMS. It's now called ECM, Exemption Certificate Management. And at the bottom left is that returns piece, right? Because they're taking all of that information from the exemption certificates, from the tax calculation, and they're compiling all of that data onto the returns with our assistance. You'll notice on the bottom right, though, this is kind of a newer piece in the context of selling. Our client is really transmitting compliant e-invoices over a certified network. It's called e-invoicing or live reporting, and it's popping up. Regulations are popping up all over the world. So if you haven't heard of it yet, you probably will soon. If you are selling globally or you intend to in the future, e-invoicing and live reporting is definitely something that will need to be on your radar. More and more countries are requiring this. Mandates are going into effect. They have already gone into effect in several countries, and they will be going into effect in more, especially throughout the EU, Mexico, etc., India, to transmit those invoices to clients and also to the government electronically. So huge push for that across the world, and lots of talks of it coming to the US as well eventually. So we do have capabilities for that as well. So supporting these core activities, there's a host of additional supporting products that range from tax research, which is a huge differentiator, where we can provide that tax research tool to help businesses with not only determining nexus, but taxability of their products and services. We also are helping a lot of organizations when it comes to HS code classification. So many businesses are shipping goods across country, across borders, right? So if you're shipping into Canada, and then you're shipping that physical product, you need an HS code, and you also need to be able to calculate those duties and tariffs. So those are all things that we can help with as well. And then last but not least, you may not know this, but a lot of our businesses, clients do need help with W-9 and 1099 management. So that is something that Avalara can support as well. So you essentially see here, the core solution is in orange. Those are things that, Avalara is most well known for, that tax calculation, exemptions, returns, that e-invoicing, again, global component. And what's in blue is really some of those additional differentiators. Again, just makes Avalara different, a fuller partner to you to be able to provide some of those supporting products as well. So let's look on the purchasing side, though. In the context of this diagram, you're making purchases from your vendors, and the product that facilitates that calculation of taxes on those purchases is also Avatax. So a lot of people think about Avatax and Avalara for sales tax, but it's sales and use tax, right? So instead of, needing to calculate the sales tax on something that you're selling, you might actually have to calculate what that tax should have been on the purchase if you were not charged, or maybe you're trying to verify that what you are being charged is correct. And then instead of receiving certificates, you might be sending your own certificate to your vendors to make sure that you're not paying tax on transactions that you shouldn't be. So, where does all of that data go? Again, it's going to go to the returns because in most cases they are sales and use tax returns. So a combined return with both types of information. And then you'll see that that e-invoicing framework is still there at the bottom right of that top, quadrant, because again, you may not be sending e-invoices, you might actually be receiving those. All of that's going to have to automatically flow into the AP system as well for purchases. So as you can expect, you also have the supporting products on the bottom that mirror what you saw in that last graphic on the right. So again, doing that initial calculation, you also might have to verify and validate, everything that you're looking at, whether it's the product classification of goods, understanding the rules about taxability of what you're actually purchasing, verifying or sending, those vendor charges, and then also, possibly collecting some additional forms. So again, you'll see those core products in orange, you'll see the supporting products in blue. All of that kind of coming together for you here. You'll notice again, the company at top, flanked by the vendors and the customers. Again, you'll see those orange products. Those are the core products in orange at the top. And then those supporting blue products underneath. And obviously property taxes in green, because that's a little bit different than that. And then I do want to mention some other pieces. So again, that integration there is that third line. So not only with the ERP like GP, but also those e-commerce, marketplace, etc. And just keep in mind that if there is not an integration that we have that you need that's already built, we do have an open API where an integration can be built either by yourself, your team, or even a partner. And last but not least, there's a final layer of products down there at the bottom that I do want to point out. So, all of this is supported by things like, our implementation, our support, our training, really end to end in what we're offering there from an implementation standpoint to training and then ongoing support. And there are a couple other key things to mention. I mentioned the sales tax risk assessment already, but we also have streamlined sales tax, which I'm going to talk about in a minute, where we're partnering to, make that process easier and also to maybe even outsource some of the actual payments of these components to the states themselves. So a couple things to note on the overall Avalara products and services. We're built in the cloud. It's a multi-tenant solution. I mentioned, we're 20 years in the making. So it's a mature solution, much more mature than our competitors, even though some of our competitors are older than Avalara. Our solution was built in the cloud. We've not, reworked an old solution. We've built it and we've refined it over the last 20 years. That integration piece is super important, specifically with Microsoft, that functionality, the speed of updates. As you know, Microsoft makes lots of updates, and we've been doing enhancements to our connectors as well. So we have a whole team of people that support the Microsoft connectors on our side, not only GP, but things like the sales component, commerce, etc. So, we've got about 14 different connectors for Microsoft functionality. And then I mentioned the Microsoft base is just a huge differentiator. One thing that I didn't mention when we talk about the sales tax piece is, and I think you can see it here, is that really Avalara is aiming to be a one-stop shop for organizations. Again, keep in mind, you want to think about a partner for now and then a partner that can grow with you down the road. So that's really the differentiation when it comes to thinking about it from a partner standpoint, someone that's going to be able to support you in the immediate and then in the future. So how does it really all work, right? When you think about automation, I can kind of talk a lot about, why it's important to think about automation, how, how we offer all of these different services, but how do they all work together? So this is just a quick little graphic that shows you what Avalara is actually doing kind of behind the scenes. So when you think about it, AvaTax is really in the middle. That's that tax determination piece, right? We're connecting with your systems. So think about GP. You're going to connect directly to GP. So we've made that API connection. Whenever you are doing a sales order, an invoice, what we're going to be doing is all of that information. We're setting aside the core logic of GP. There's no tax tables to maintain. There's no rates to maintain. What you're going to do is you'll map out your products and services to our Avalara tax codes. That essentially tells us what it is that you're selling. GP is going to send us that information along with your customer information, the ship to, the ship from, quantity, cost, all of those things impact the tax determination and the tax rate. It's all going to be sent over to us via that API. And then we're going to send the correct tax rate back. And if you look to the left here, you'll notice that, again, it's sending that customer information. So part of that tax determination is whether or not that customer is an exempt customer, or this sale is an exempt sale based on the project. So it's going to give you a place to store all of those exemption certificates so that they're not in just a folder or on, they're actually going to be in the cloud. So it'll provide tools to be able to request those documents, to receive them, help with validating them. We also have managed services that can help in doing that so that you really truly have expert eyes on those documents, really turning that paper to digital. All of that is part of that tax determination to get you the correct rate back, even if that rate is 0. And then all of that information is going to pass over to the returns section so that we can not only file the returns for you, but we can also do the remittance and we can manage any kind of tax notices as well. So really quickly, if you're in GP and you're doing an invoice, that invoice is going to be saved. If you're on something like an e-commerce site, customer is going to hit purchase or put the items in their cart. And this is really what's happening behind the scenes. First and foremost, we're validating and correcting the address. And that is a super important point because what we're doing is we're actually validating the address so that we can be pinpoint rooftop accurate on those rates. And because we can do that, we offer an accuracy guarantee, which our competitors do not. So again, we're not just going off of the zip code, we're transposing it to longitude, latitude on the back end, and that's what allows us to be super accurate. Next, we are going to look to see if you are registered to collect tax in that jurisdiction. If the answer is no, then the rate is 0 because we don't need to do a tax determination on that particular piece. However, if you are registered, now we're going to look and see, is that client exempt? So, or is this project exempt, right? In the case that you might have some project level exemptions. Again, we're going to be looking at, we can certainly look at GP if you have the client marked, but a better scenario is to really look at the exemption certificate module that actually has the physical document there so that we are looking at the correct document to ensure that this particular sale is actually exempt. So if that client is not exempt, now we're starting to get into the nitty-gritty of applying the sourcing rules, really looking at the applicable jurisdictions, and then we're looking at every single line item on that order or invoice. And we're looking at the taxability of each and every line item, because as you know, you probably have, multiple line items, some are taxable, some are not. And so we're really looking at the taxability of every single line item and doing a calculation on each line item to then present back to you the total tax. All of that's going to be stored for the future reporting. Flows over automatically into the returns section if you have that piece turned on, and then you can sleep peacefully at night, right? All of this actually happens in a sub-second, right? That's what we call the sub-second. So in just a fraction of a second. So really fast. We are as out of the way as possible. So you're really working in GP. You do not have to leave GP. All of this is actually happening in GP. It's pinging us. We're immediately sending the correct rate back to you. This is kind of a look behind the scenes on the Avalara side to give you a little bit about that tax decision tree. Again, looking at the ship from, the ship to, all of the other information that came over, and it gives you a quick look at, again, that decision tree. Our collecting tax here is the customer taxable, is the product or service taxable, and then it'll actually show you a breakdown of all of the different taxes and then that total down there at the right. You'll actually be able to see this in GP as well. Couple of key additional points. I already mentioned it, but again, multiple connectors can be run. So GP, obviously, but then you can also have, again, e-commerce, POS, etc., all running and connected to Avalara at the same time. So it does give you the ability to integrate multiple business systems and have one single source of truth so that the consistent rate is being applied for reconciliation. It's as automated as possible and it's flexible, right? So if any of those one components change, you don't have to change your whole system. You just swap out the connector for whatever the new system is going to be, install that new connector without having to reinvent the wheel. So I throw this slide in here, again, specific to GP. I showed you a lot about all of the functionality that Avalara has to offer when it comes to the GP connector itself. The GP connector is going to continue to be maintained and updated with new functionality. So our top 10 connectors, GP is one of them, Business Central and Finance, D365, are two of the other in our top 10. So a lot of focus still going on our side as far as GP is concerned and what we're supporting and what we continue to add. So this year alone, we've added additional functionality to the GP connector. We've always had AvaTax, and exemption certificate management and returns, but we have added accounts payable. We have added cross-border for duties and tariff calculation. We have added VAT calculation. So global functionality really has come to that GP connector. And then in the works on the roadmap for later on this year is also that e-invoicing functionality that we're going to be adding built into the GP connector. So again, continuing to support GP, continuing to make investments in it. I started with the Nexus piece and I kind of wanted again to wrap up on the Nexus piece. In addition to all of that, all of those transactions are going to be flowing through the system. So we are also going to help you with tracking that Nexus. So key thing is first to figure out where you currently have Nexus, and then you have to maintain that and pay attention to the states, that you don't have Nexus in so that you don't trigger Nexus. Our system will automatically do that as well for you, color coding those, alerting you proactively that, hey, you're approaching Nexus, you maybe need to consider getting registered. And then I mentioned streamlined sales tax earlier, but I kind of wanted to just wrap up with this piece. Streamlined sales tax is a way to potentially save money while staying compliant. So if you have Trip Nexus in some states, and you're just, thinking, oh my gosh, what do I do? This is going to be so expensive. How do I do all of this? So many states to take care of. Number one, figure out where you have that Nexus. Take advantage of that free Nexus study. Number two, think about automation and getting that in place. And number three, it may not be as expensive as you think because some states will actually pick up the tab. So you'll notice here that there are several states. So there's 24 states, and then Pennsylvania has its own version of streamlined sales tax, where if you qualify in their state, you will actually have your transactions, your registration, and your returns paid for by those states. Huge, huge money saver. I know I'm just about out of time, but I want to leave you with one more poll. And that is, if you will be so kind, Amy, to put it up, how likely are you to consider implementing Avalara solutions after attending this workshop? Hopefully, very likely. If it's undecided or not sure, I would really, truly encourage you to reach out to have that conversation. It doesn't have to be a hard sell or sales process. Again, as a former teacher, my goal is always, always to learn about your business and provide you the best possible information I can. At the end of the day, any kind of change to your business, any kind of automation, new tool is a business decision that you need to make, and your business best. But we're definitely here to help and have those conversations to really be true consultants and partners to you. And, I'm happy to help. Please feel free to reach out to me with any questions that you may have at all. And if you'd like to see me in person, I will be at Community Summit speaking there, and definitely at our booth as well. So would love for you to stop by and pick my brain, or feel free again to email or text or call.
Well, thank you, Michelle.